But we want to add another voice to the conversation right now and talk about what could move markets in the final 2 weeks of the year. Joining us right now to talk about that is Krishna Memani. He is the former vice chairman of investments at Invesco. And you have long been an emerging markets guy.
Yes.
It's been like your story.
Yes.
And we just had a guest on who said, you know what, don't put any money in the U.S. markets right now. Things have actually gone on a nice little tear, a nice little run. The real action is going to be in emerging markets. Is this finally your moment?
Well, so I'm sure as hell hoping it is finally my moment. The challenge with emerging markets has been two things. One, the fact that the U.S. dollar has done as well as it has over the last few years. And when the dollar is doing very well, the likelihood that emerging market equities do substantially better than the U.S. market is pretty low. The other really has been the trade issue, and I think both of those issues are getting resolved. Right. So the outlook for emerging markets from an equity price standpoint, from a debt return standpoint, as opposed to just economic activities, looking much better in 2020.
The reason I raised the question is you look at what Mike just showed you on the screen there. I don't know where Mike just disappeared to, but you look where Mike was on the screen there. Both on European, you did the little line across on European stocks, but then also you look obviously where U.S. equities are. Would you invest more right now? If you had a little extra cash on the sideline right now, what would you do?
Well, so I will buy global equities, and I would have a fair allocation into U.S. equities for sure, because they are going to do very well in 2020 because everything is coming together from an economic standpoint, from a trade standpoint, from the Fed standpoint. But I think, relatively speaking, I will probably allocate more than my fair share in international equities, especially emerging markets. I think finally the dollar is going to roll over. It won't roll over a lot, but it'll roll over. And the outlook for emerging market, you see the data in China, it's definitely stabilizing. Valuations are much more attractive.
And are you just buying a basket, or are you doing something more nuanced than that?
Well, so approach to emerging markets really has to be company specific. Okay. It really can't be a basket-driven, because the difference in outlook for various companies is far more dramatic than it is in the U.S. So I think even if you can get away with doing a basket in the U.S., emerging market investing really has to be...
Now that you have this former title, are you unencumbered? Can you start giving us names?
Well, no, I can't.
Some corporate names?
I think, again, if you look for emerging markets, the place to be is really consumption and technology.
Okay.
Those are really the two drivers. You don't want to be in the old industries. It really has to be, companies like Alibaba, companies like Tencent, or consumer goods, healthcare companies in China. I think those are the sort of names that you want to look at.
And you trust the numbers in China?
Well, so I think, again, the trusting of the numbers, you really have to, even if you haircut the number some, the multiples relative to what you see in the U.S. provide you plenty of cushion. So trust, verify, but at the same time recognize that valuations are extraordinarily attractive.
Okay. And what about Latin America?
Well, Latin America is kind of a more questionable issue, because I think valuations are attractive, but the turnaround of the economy is really not as certain as it is in Asia.